everyone. Thanks again for joining us for part 3. This is our third and final part of our webinar series for first home buyers. So just covering off probably the last few points in terms of the first home buying process for people to kind of get their head around maybe the last few things that they need to do, and even, parts that are worth considering when you're looking at being in a position where you finally got the mortgage and how to handle things in a better way so that you can reduce your mortgage as quickly as possible. We've also got a couple of guest speakers who will join us as well, who are really important parts of the first home buying process and will help you through the journey and make things a whole lot easier for you, especially if you know how to work with them in the most efficient way. So probably just to kick things off and to kind of get things started, I think the main thing that is probably worth considering when you are purchasing your first home, not only in terms of maybe what's personally important to you, but if you are looking at the future and maybe where you want to end up financially, property is a really, really good vehicle to help you get to a point where basically you can build yourself a little bit of a net worth and have a better financial future ahead of you if you do things right or efficiently moving forward. So again, aside from the personal preferences that you have with a property, maybe in terms of things like number of bedrooms and things like that, what you want to probably look at is the specifics of a property that might make it attractive to someone like you who may buy it in the future, or someone who may rent it off you in the future. And one of the most important things when you're considering this often tends to be the location of the property, not only in terms of where it's situated, but also what is actually around. So keep in mind that while your first home might be a massive purchase and probably the last one that you'll be doing for a while of that sort of size, something that you need to be aware of is that it is only your first home, and it is going to be something that if you can do it right, it can help you step forward to maybe the next properties that you might look at in the future, whether that be a rental property or at a stage in life where maybe you need to upsize your home because you're starting to have a family or something else like that. So in terms of location, the things that you would probably be looking at really comes down to what's around you. So if you were a prospective buyer of that house or a tenant, what would you be looking at? You might be looking at things like neighbouring schools, maybe local shopping centres, hospitals, transport, and all of those sorts of things that are really, really important when determining the value of a property and what's important to people who may be occupying it. So again, you may not necessarily be selling it, you may be looking to tenant it out, and so you'll just want to make sure what you are actually purchasing is going to be attractive to someone like that. So realistically, locations are important because it'll determine what is actually around you. And then again, it's also looking at things like the suburb itself. So is it safe? What sort of neighbours do you have? What is the nature of the house? Is it a freehold property? Is it a cross-lease property? And those sorts of things which may be important as well in terms of determining the value for the house in the future. Certain properties tend to actually appreciate in value more so than others, and others tend to certainly, stay roughly what they were worth for a longer period of time. Typically what that tends to be is things like if you pay market value for a property, there may not be ways to increase its value in the short term, or even if you're looking at certain types of properties like apartments tend to grow a little bit more slowly than maybe other properties over the longer term. So just sort of look those sorts of specifics of a property and get an understanding maybe of what's important as a buyer and as a renter so that you can consider who you might be looking at when you eventually move out of the home that is now your first home. Other things that can be important to people are things like gyms, restaurants and things like that as well. In terms of actually getting a bit of an understanding maybe on the legal side of property, we've got Kristine King here as well from Duncan King Law. Kristine's got a massive amount of experience in terms of the legal side of property. She's been in property for an extended period of time and basically is here to give us some tips and tricks on what to look for with properties and also how to work best with your lawyer. So thanks a lot for being here today, Kristine. So Kristine, can you give us a bit of a rundown on how a solicitor can help a first home buyer, in the property buying process?
Yeah, not a problem. And I guess for me, Awesome opportunity to be here today, because it gets a little bit of an opportunity for me to clarify what a lawyer does. I know there's a lot of people out there who think that a lawyer just comes in at the end and just transfers title and doesn't really understand, what our role would be. But funnily enough, our role is so much bigger than just that sort of admin at the end. Our job is really to help our clients find a property that's good for them, but is also good for their lender and also their insurer. So you can almost think of your lawyer as assisting you in your hunt, but also weeding out problems. So I guess my main message is, whenever my clients are buying property, I don't want them to take on anyone else's problems. So how does that work for us as lawyers? So let's say, you come to me, you're really interested in a house. We would be reviewing that property, and that means actually reviewing a lot of different things. So it could be that property pack that you get from the agent, so the sale and purchase agreement, the title, the limb, but we also like to go further than that. So I'd love to have a look at the property file from council. There's usually some pretty good gossip in there, maybe original build plans. We can see if someone's illegally renovated. I don't know if you know this, you can actually go online and look at visual or images of properties over the years, so I can check out if maybe your neighbor has chopped some trees down. Lots of fun stuff like that. But the idea is, as much as possible, trying to scope out this property, make sure that there's nothing hidden in there that would be bad for you, but also then we can tailor our advice. So we want to make sure that if you've got some future plans for that property, that property can accommodate it. It might be that you're thinking about renovating, so we can give you some info about what kind of zone the property is in, potentially map out for you what kind of requirements council might have, but also look at the interplay between the council records and also the title information to make sure that this property can actually work with you, your family, and your plans for the future. So we've got a lot to do. So there's a lot of hard work in the beginning in terms of approving those properties for you. Certainly if you're looking to buy at auction, and some of you still are, and there's still some good opportunities to do so. I know the clearance rates are down. We need to prep you before the auction actually goes ahead. We don't want to do this process after the hammer's gone down. That would be very, very scary. But if you're even looking to purchase via maybe tender or negotiation, again, we're doing those investigations for you before you actually declare unconditional or before your tender is accepted. So we've got lots of work in the beginning, and then we actually move into a phase once you're unconditional of working with you, your bank and insurer, to work through that sort of implementation of your lending and getting you to the point that your lending's in place and also the property's title is ready to be transferred. So we've got 3 quite specific phases. So I'd like to call it like a pre unconditional investigations. We have post unconditional work or admin, and then we've got the settlement process. So lots of things going on. So I guess then what you'd probably ask is, when should you think about approaching a lawyer?
Not at the last minute, hopefully.
Please, not at the last minute. Now, don't get me wrong. I've just got clients in who've emailed me this morning, always apologetic, which is super cute. But they've mapped out that, one's going to auction tomorrow, the other one is due for tender tomorrow. And we also appreciate some of these auctions are still being brought forward. So we still do get what we call the sort of last 24-hour requests. And yes, especially if you're polite, we can accommodate. So it's always worth asking rather than going into the process blind and, as I said, maybe taking on someone else's problems. But ideally, though, we've got you onboarded as a client, ready to go, so we're actually able to move with you and what you want to do quite quickly. Okay, so we do have some somewhat pesky requirements these days to make sure that you're onboarded and you're not money launderers, believe it or not. So there's a little bit of work with us in the beginning for us to identify you and get some data around, where you live with proof of address, have you onboarded as a client. But it's also worth, I think, spending some time chatting to your lawyer, telling them what you're up to, and also giving us a bit of background info about you. Like, I'd want to know, are you in rental accommodation? So with our settlement timeframes, do I need to accommodate notice to your landlord? Will you be applying for maybe the Kaingora first home grant? And again, timeframes are very, very important in that process. Or classic one with my first home buyers, Do you need a KiwiSaver withdrawal? And if you do, when do you need the money? Is it for settlement or for your deposit? All of that pre-information, which should kind of flow through when we're having those initial chats, well before maybe you're even starting to look, will help me tailor my advice. And it means when you come to me with a contract or maybe an auction agreement, I can look at it and say, hey guys, remember we need this amount of time to get your application in, or we need some time to actually get you to give notice to your landlord. So my piece of advice is, if you can, chat to your lawyer nice and early, get onboarded into their system, get to know your lawyer, but also have your lawyer get to know you and your circumstances. It means we're ready to go, ready to look after you, but also our advice can be absolutely tailored to your circumstances. So nice and early would be ideal.
Yeah, I think from what I'm hearing, I think the key thing would be, if you know that you're looking at property and you are going to be buying reasonably soon, then it makes a lot of sense to probably get onboarded initially, basically have the conversation, figure out the circumstances, and obviously if there is going to be the involvement of something like KiwiSaver, letting you guys know that and sort of working through the process from there. Because I think a lot of people maybe underestimate how much work there is involved, and they think all you've got to do is basically transfer the title, but then there's the whole advice process that every property is different, and even if you've done this 100 times as a purchaser, you are not a lawyer and you don't know basically, the ins and outs or the legal details of a property.
Exactly. And I have to say, even if you are a lawyer, the process actually, there's a bit to get through. So I know if I'm even looking at properties for myself or, say my staff here, we go through exactly the same exercises, essentially scoping out the client, but also scoping out the property to make sure we don't have any problems moving forward.
Yeah. I think there's been a lot of situations where I think a little piece of advice can change the entire view on a particular property if you are interested in it. So getting that sort of advice is important, and you don't want it to be rushed where someone maybe has to do 100 other checks for you rather than looking into the property. It's better off to get your ducks in a row.
Exactly. And also don't overlook the fact that your lawyers can actually be a huge, really useful source of information. So if you can imagine, and it's not just because I've got grey hair, but I have been doing this for quite a few years, and I've seen thousands of transactions, good transactions, bad transactions, good properties, bad properties. We can actually give you some really, really good tips based on the experiences that our clients have gone through before. So I always say to my clients, and again, we work on set fees, so my clients are more than happy to just ring and chat, and often we just, shoot the breeze about stuff. But it might be just, a client sees something kind of interesting and thinks, what is this on a title? I'm more than happy to actually answer those questions, because I actually think it's important my clients are actually educated and informed in this journey. I mean, this is going to be a really big purchase, hopefully the most expensive thing you buy for quite a while.
Yeah.
It's really important that you just kind of really engage with me, but also really comfortable. It's never a good process if you feel nervous or you feel that there's something you don't understand. So actually, guys, if you're out there looking for a good lawyer, do look out for ones that offer set fees, because I personally think we should be encouraging a really healthy kind of open dialogue, and that thought that you can ask any question. And it's not about smart questions or dumb questions. All questions when you're looking at property are really good questions, because again, you're about to spend a ton of money, yours and the bank. So we do want to make sure that it's the right thing for you to do. One little tip though is a lot of lawyers do offer what they say is set fees, but some lawyers, we're known for being somewhat sneaky or smart with our T's and C's. So if you're out there chatting to lawyers and they're offering a set fee, always check with your lawyer what that excludes, okay? So I know certainly for my first home buyers, we don't change our pricing if you have your Kainga Ora first home grant, and nor do we charge extra for our KiwiSaver process, because hey, it's for me, it's part of that package for looking after first home buyers. But I think it's a bit crummy if you get kind of these surprise bills when you're really just trying to be looked after. So just if you're out looking for lawyers, ring, get some maybe recommendations is always a good start. And then just actually touch base with that firm, ask them how they charge. Are there any kind of hidden charges? Do they charge extra, for looking at limbs or for your KiwiSaver withdrawals?
Yeah, that's cool. That's really, really good advice. Well, thanks so much for your time today, Kristine. Do you think there's maybe anything else that you wanted to add at all?
One quick little tip, particularly for my first home buyers, one of the big areas where I do see some mistakes is KiwiSaver withdrawals. Super important, guys. Lawyers are like your lenders and your brokers. Very intelligent people, but we're not psychic, okay? We only know what you've told us, so it's really important you do tell your lawyer as soon as possible when you meet me or we're onboarded, if you do need KiwiSaver, but also when you need the money out from your KiwiSaver account. Is it to pay the deposit to the agent? Is it to pay it on settlement? Okay, because they're quite separate processes. They need to be handled very carefully. And quite unfortunately, if you approach them in the wrong way or misunderstand when the process should be undertaken, it could cause quite critical errors. So full transparency with your lawyers. It's better you tell me more than less. I need to know everything about you, those financial plans, and yeah, definitely out as much information as you can about your finances and your KiwiSaver if possible.
That is awesome. Thank you so much for your time. I really appreciate it.
Not a problem. My pleasure. Thank you, everybody.
Thanks, Kristine. Cheers. We've also got Shane here of Ray White Mairangi Bay. Shane's the owner of Ray White and has also been in the property industry for going on a couple of decades now. Shane's not only a real estate agent, but also an active property trader and investor himself. He's been in the market for pretty much just as long as he's been in the real estate game and has a whole lot of experience both buying and selling property. So we're pretty happy to have Shane here today to help us out.
Yeah, thanks, Ryan. Glad to be here.
Cool. So I just thought it might be worthwhile just getting someone like you who has a lot of knowledge of the industry just to help out first home buyers, give them a bit of an understanding of how they can work better with agents and how they can basically just get in touch with someone like yourself or someone from your team to make the buying process a bit easier for them. So do you want to maybe fill the viewers in on how an agent can be helpful?
Yeah, so I guess there's definitely two ways an agent can be helpful to a consumer or a customer. And you've certainly got agents that work more with the vendors and creating campaigns, and they're more sort of listing agents where they concentrate on their own stock only. There are other agents which may focus more on buyers, which you'd sort of call more a buyer's agent. And those agents are probably quite handy for first home buyers to form a relationship with. They can effectively work with you, find out exactly what it is you're looking for, and then go and source the properties from either their company or other companies as well, and then take you through a whole lot of listings, give you good advice. You know that they're there to help you. The seller still ends up paying them, but you've got someone on your side. And if you're a bit new to the whole thing and it's a little bit daunting, having someone to work with you hold your hand through that process can be quite beneficial.
Yeah, I think it's some people aren't aware that maybe some agents are working effectively, as a buyer's agent. They're not necessarily working for the owner who's listed the property with a particular company, and so that person can maybe have the buyer's best interest at heart and help them find something that might fit their buying criteria, whether it's number of bedrooms or location or anything like that might be useful to the buyer.
Yeah, absolutely. I think also, all real estate agents have a fiduciary responsibility to both sides of the deal, of course. But if you've got someone there that's working closely with you, taking you through houses, sourcing property for you, they're going to be on call for that advice and that extra care that you won't necessarily get from just going and visiting open homes and dealing with a listing agent who's dealing with a million more buyers as well. I think also there are properties that won't always hit the market, or maybe they've just come off the market, or maybe they're not quite on the market yet, or there's some off-market opportunities as well. And if you're dealing with a buyer agent that's sort of got their ear to the ground, there's possibly they might be able to source a few other properties for you that you may not be able to find on the portals as well. So certainly, if you've got someone who's got the time to put into helping you, it is certainly a good way to go.
Yeah, for sure. I think having someone who understands the market, understands what properties are coming on, going off, what's around, maybe that sort of stuff will really help if you are a buyer in the current environment. I know recently over the past couple of years it's been really, really difficult for buyers to make their way when they are trying to buy a property because it's been so competitive, whereas at the moment I think if you're willing to take your time a little bit more, you can probably get a whole lot of a whole lot better deal maybe on the market now than what you were able to not too long ago. So working with someone who knows what they're doing will be really helpful.
Yeah, definitely. I think you're touching on a good point there as well. At the moment there is probably a good opportunity. It's a good time to be buying. We're noticing that good quality properties still getting multiple interest, but there are some opportunities for some good buying out there as well. Absolutely. And I think certainly the key is to be prepared. So I would certainly urge you to primarily your first sort of job is to talk to Ryan and the team, and make sure you get pre-approved, know what you can spend. Also get clear about what it is you want, and maybe go through go over through open homes for a couple of weekends, get a bit of a feel for what it is you're after, what area you want to be in, and then get prepared. Get your mortgage in place, pre-approved, do homework. Talk to builder friends. Talk to your agent about loan reports so you can understand them clearly. Basically, try and get yourself as prepared as possible so that when the house pops up that you do like, and you want to go for it, if you can reduce the length of your conditions and minimise them as much as possible and make the most attractive deal you can to the vendor, they're more likely to be a little bit more forgiving on the price than they might be with someone who's a very conditional buyer. So preparation will possibly make you money at the moment. So very, very key.
Yeah, I think that's a really good point. I think getting in touch with an agent once you know exactly what it is that you want and also what you're capable of buying. Sometimes people go into a market that maybe they can't afford because they haven't gone through the mortgage pre-approval process and they're just basically going through and browsing, which might be great from an educational point of view, but the worst thing in the world is finding a property that you fall in love with and you're not able to buy it because you haven't got your ducks in a row. So I think it's a matter of making sure that you do get everything underway as early as possible from a mortgage point of view, so that when you do get in touch with an agent or someone from Shane's team, that you're in a position where you can actually pounce on a property with as little conditions as you can, really.
Definitely, and I think the other side of that too is that you've got to remember that agents, we're not paid an hourly rate. So if you're getting someone in the car for 8 hours and over a day and taking them through a whole lot of properties, sometimes I think people have a mindset that it's their job, that's what they're going to get paid to do. But you don't get paid unless you get the deal, make the deal happen. And so I think, for someone to want to work with a buyer, if a buyer comes in and tells you, hey, look, we're really prepared, we know what we want, we're ready to buy, we want to work with you, you're going to get a lot better service from that agent too if they think, okay, this guy's ready to go, I'm going to put some time and effort into that because there's a paycheck here. So I guess from a preparation perspective, it's twofold. You're going to have access to better deals with a vendor, and you're going to get probably better service with an agent as well if you are prepared and ready to go.
Yeah, I definitely agree with that. I think it's one of those things that I think if you can put your best foot forward and basically be as prepared as possible as a buyer, then obviously the agent's going to do the same on their end. So I suppose, Shane, do you have any other maybe initial tips for first home buyers or anything like that you think maybe they should look out for or be aware of in a market like this one?
I guess if you're a home buyer, don't be too worried about the roller coaster ride that you go on with property prices. They're always going to go up, and then they're going to go down, and then they're going to go up again, and they're going to go down again. If you're looking at something really long term, you're sort of riding those waves a little bit. At the moment, for a first home buyer, do they wait a little bit longer and have access to a better price as the market comes down a little bit, potentially, we don't know that for sure, or do they jump in there now and get the right property with the current interest rates before they get too much higher, is probably the sort of the dilemma. I would recommend, if you're looking at buying a home that you're going to live in for a while, we'll go back to that preparation thing, but get yourself prepared. And if the right home does come along, and you feel like you're getting it at the right price, then there's no point in really delaying. You'll get that access to that lower interest rate than what you might get in 6 or 12 months. That's more your field, Ryan, but that sort of seems to be the talk. And you get the home that you want. and eventually their home's going to go up in value. Even if it does go down for a few months, it'll go up in value in time, of course. So I wouldn't wait forever. The preparation thing is the key part, and then jumping on the right place. Make a decision to jumping on the right place when you see it. I think sometimes people can sort of. I found the most successful property investors are the best decision makers, and when people see something that fits the bill, they jump in there and make a decision on it quickly. They analyse it but they make a decision quickly before someone else does, and that's usually how they get ahead. So get clear about what you want, get prepared, and then make quick decisions when the right thing pops up as well. I think is
cool. Yeah, no, that's awesome advice. Thanks again for joining us today, Shane. We really appreciate it, and hopefully we can end up working with you more in the future. So now that you understand a little bit more about the basics of property, what to potentially be looking for in terms of the property itself, but also the legal side, and how you can best work with lawyers and agents in terms of the home buying process, it's really now about understanding, okay, when you do get to a point where you are actually working on understanding the property itself, what might be important with the mortgage that you've got and how to make it work most efficiently, you need to understand a couple of things about how you may be able to add value to properties. Why this is important is that many first home buyers tend to buy property with less than a 20% deposit. If you're lucky enough to be in a situation where you have, let's say, a 20% deposit or more, then adding value to the property is still important, but it might not be as important from a cost point of view as what it is for people with less than a 20% deposit. So what I'm talking about here is if you've got a loan and let's say it's 90% of the value of the property that you buy when you buy it, then what tends to happen is that banks will either charge a low equity fee or a low equity margin on top of the interest rate that they offer you. That number is roughly around a 0.75% figure. So if it's an interest rate margin, then basically the rates that you're offered are about 0.75% higher than the average interest rates. If, however, it's a low equity fee, then it's basically just 0.75% fee up front, and it's often can be added to the loan or capitalized, which is the same thing. In terms of how that tends to work and why adding value can assist in reducing your costs, is if you bought a property and you had a loan that was 90% of the purchase price, over the short term, so if you were to look at your debt repayments, you're not actually going to knock a massive amount of debt off the actual size of the loan in the first few months or even couple of years. However, if you are able to add value by doing things which might increase the value of the property, and these could be things like potentially adding a bedroom, maybe sticking a wall up, or cosmetically renovating the property by way of doing things like painting the house, changing the carpets, doing a bit of landscaping, adding a deck, potentially things ideally that don't require consent, so that it's less of a hassle for you when it comes down to having to deal with council and things like that. But if you can do those sorts of things and add value, while the mortgage may not have reduced in a short period of time, if the value goes up, your loan to value ratio comes down. So while you may have had a 90% loan previously, let's say initially you get in, you renovate the property and the property is worth quite a bit more, you're then in a situation where your loan to value ratio might be lower, and it could be, let's say, at 80%. If you were in that situation, you can then go back to the bank after you've done those renovations, usually around 6 months or more, and you can negotiate with the bank to get that 0.75% margin removed from the interest rate that you've got. That way you can end up saving quite a lot. And of course, 0.75% doesn't sound like a lot, but over the life of a mortgage, especially when you're talking a mortgage of hundreds of thousands of dollars, it can tend to add up dramatically. So it's a good way to find yourself in a situation where you get to a lower loan to value ratio quicker and also build yourself a bit of equity. But in addition to that, you actually look at reducing your mortgage costs over time. The ins and outs of doing this can be a little bit more specific, so it's probably worth having a proper chat on a more individual basis than something like this sort of format. But it's definitely something that we do help clients work towards in terms of trying to reduce their mortgage costs, and it's just one of the many ways to do that. One important thing and question that we often tend to get asked is for people who buy a property, let's say, and they buy it under value, they often will ask us if they can work off the valuation figure for the loan to value ratio purposes. Unfortunately, banks will always fund you off the lower of the purchase price or the valuation. So let's say you bought a property for 750k, but you got a valuation on it because either you wanted one or the bank required you to get one, and the valuation was actually 800k. The bank's not going to look at the property's value as 800, they'll look at it as what you paid for it, which is that 750k figure. Only after 6 months, assuming you did, let's say, nothing to the property, if you then got the property valued again at 800k, the bank would accept 800k as a figure. And it's just because at the time of purchase, the bank will always work on the lower of the two. Again, with that being said, if the valuation came in lower than what you paid, the bank will actually work off the RV figure. So just keep that in the back of your mind. If you renovate the property soon after purchasing it, you don't have to wait the full 6 months. And so that's where renovating and adding value could actually put you in a situation where you end up moving forward financially a whole lot quicker. Other ways outside of adding value in terms of moving yourself forward financially is looking at ways and opportunities to reduce your total mortgage debt quicker. Now, there's several different ways that you can do that. One of which might be looking at things like increasing your income. So an option there, for example, might be doing something like renting out a room or two and taking those payments and then allocating them to the mortgage. It's important to be aware that it might not sound like much if you get an extra, couple $100 a week in the door, but when you look to apply that to your mortgage, they can make massive, massive differences in terms of your debt repayment over time. So to give you a bit of an example, let's say you took out a mortgage for about $750,000. If that mortgage had an interest rate of, let's say, 5.5%, that's probably roughly where rates are at today, your monthly mortgage payment would be about $4,258 per month, or about $982 a week. Now, if you rented out one of your bedrooms for, let's say, $200 a week, and you put those payments directly into the mortgage to reduce your mortgage quicker, you'd save roughly about 9 years and 40 weeks out of the 30-year mortgage, and you'd also probably save about $289,000 worth of interest costs. So basically, you're at a point where you almost cut out about 10 years of your 30-year mortgage, and you save almost $300,000 in interest, which is just a massive difference, particularly when you're talking about only a $750,000 mortgage. The actual interest costs that you save are almost half the total mortgage itself. So little payments like that can make a massive difference in where you end up in the future, and this will all work towards what you're able to do financially, which might be things like upsizing your home when your family starts to grow, or when you maybe want to move into a different or better location, or it might even be building up equity so that you can continue to purchase investment properties and grow yourself forward financially that way. So just probably look at maybe subtle changes that you could make in terms of your lifestyle that might be able to have quite a dramatic difference in terms of what's possible for you in the future. Something else worth considering, and it may not be suitable for everybody, is looking at things like revolving credit or offset facilities. Now, not everyone understands these, and they may not be suitable for every single person who's taking out a mortgage. But where these facilities are fantastic is that if you've got any additional cash surpluses, or you've got funds sitting in an account, if you allocate it appropriately in one of these two facilities, you could be in a position where you can actually offset a lot of the debts that you've got in a way that reduces your interest costs. So let's say, for example, you had a loan and you had a $100,000 loan on one hand, and you had cash in several accounts, which might be a savings, could be a holiday fund, it could be a checking account, and it could be another account where you store for other household goods and things like that. So what you can do with certain types of mortgage products is the total balance that's in all of those other accounts can be used to offset the interest cost that you pay on your loan. So if you had a total of, let's say, $20,000 in some of those other accounts, your mortgage was $100,000, you'd only pay interest on the 80. Again, this is one of those examples where it doesn't sound like a huge difference, but the interest cost that you save over the life of a mortgage can be the difference in years in terms of how long you take to repay it. So just be aware that little differences like this can be important. Again, there's no one size fits all with mortgages, and so often people tend to think maybe having the lowest rate is the most efficient way to repay their debt. It may not be. It could be doing things like renting out bedrooms, making extra payments, using revolving credits or offset facilities, and basically working with a combination of one or all of them to be able to help you reduce your debt a whole lot quicker. In terms of getting more specialized advice on that, you'll want to sit down with someone and have a proper chat. So that's one of those things that might be more suitable for some people than others. So just probably to have a bit of an overview in terms of what we've covered here today, good solicitors and good agents can be extremely valuable. If you've got someone who knows what you're trying to achieve and you work well with them and communicate basically what it is that you're trying to get out of the transaction, then they can make the process a whole lot simpler. They can give you really good advice that can save you over the long term in terms of both costs and mistakes in terms of what you might be looking at for a particular property, and that would help you move forward financially to get to where you want to be. In addition to that, there are little tips and tricks that you can look at in terms of repaying your mortgage. Some subtle changes can make massive differences over time, and that's important to understand when you are looking at where you are today and where you may want to be in the future. Building more equity in your property puts you in a better position to be able to do that and use the resources that you have to push yourself forward financially. Thanks so much everyone for joining us for this 3-part webinar series. We really hope you found it helpful for first home buyers. We've got some content to share with you guys, which is our first home buyer ebook, which will be available for download. If you're on a desktop, basically just click through to your right. For people who are on mobile devices, please look at the bottom. There's an icon which you can click to download the ebooks there. If you do want to get in contact with us, please feel free. We'd love to help. And our contact form is also available for mobile users on the menu dock below. Otherwise, we will be getting in touch following this. Thanks.